once you have these three things, the last thing you look for is a fair value gap. Now, this is where the key level comes in. So key levels, on the way that I would do this from scratch, right? So I'm doing this completely from a naked chart. So it may look a little bit different from my ES futures chart, but again, key levels, they typically come from trades and you just drag them. This is how I find my key levels, right? So I'm actually going to go to ES futures just to answer people's questions on that, because I get this one a lot. So this is the same chart, right? So what we can see here, it's exactly the same. You don't need to worry about the blue things, the blue background. That's not important. What you can see is this is a 50%. This is premium. This is discount. So we have our levels over here. So I often say that trading without levels is like trading blind, right? You need to know where to take your setups from. A setup is only valid if it's at a proper key level, right? It's very important to understand that. And what you will find, right, more often than not, is this, right? So if you go back to Monday, for example, I think it was Monday where I put my, I'm just seeing if there's any more people. No, there isn't. So if you go back to Monday, for example, Monday we had this 4 hour zone. For those who saw on Sunday night when I updated, I was actually looking at this 4 hour zone. Right, this 4 hour zone was very important. Now, how did I predict price was going to come here? So if you go back to Monday, for those who were paying attention on Monday, if I go to the free chat, what was it? What was the day on Monday? Someone remind me, 9th. Okay, so if we go to Monday, oh, wrong one. If we go to Monday, just going to break down how I sort of analyzed this. So Monday the 12th. Okay. So what we were looking for specifically on, I think it was Monday, no, 8th. It would have been the 8th I posted it. So 8th of March. So did everyone read this? So it's the same mechanical process day in and day out, right? So the more mechanical you keep your process, the better you're going to be, right? So what I'm saying here is that this was a higher time frame bias, but what we do on the 4 hour, we replicate on the 15-minute time frame. So does anyone have any questions on this? So typically on the live, oh, we have some more people joining. Is it Pranab? Welcome, Pranab. You want to say hi? No? Okay. Welcome though, anyway. So there's four things to look for when it comes to the four-pillar approach. So market structure, dealing range, PD arrays, fair value gaps, right? This is going to be recorded. However, you should maybe take a mental screenshot of this, because this is basically everything. Everything comes down to this, especially at the beginning. Later on, we then start doing key levels from here, order flow. Everything about key levels and order flow comes from these four steps, so make sure you have them. So if you look at the charts now, we anticipate this 4 hour kind of rejection. Right, so we anticipate this 4 hour rejection over here. So Sunday the 8th, we anticipated the rejection.